Good day, and welcome to the Century Textiles and Industries Limited Q1FY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Agarwal from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Sagar. Good afternoon, everyone, and welcome to the first quarter FY25 earnings conference call of Century Textiles and Industries, hosted by IIFL Securities. Today, we have with us the senior management of the company, represented by Mr. R.K. Dalmia, Managing Director, Mr. K.T. Jitendran, MD and CEO, Birla Estates, and Mr. Snehal Shah, CFO of Century Textiles. I now invite the management to share their opening remarks, which will be followed by a Q&A session. Over to you, sir. Over to you, Dalmia, sir.
Okay. Thank you. Good evening, everyone, and welcome to the earnings conference call for the first quarter of the financial year 2025. Let me first take you through the financial highlights, followed by the business side operational highlights. For the first quarter of financial year 2025, the consolidated turnover of continuing operation grew by 28% year-on-year to Indian rupees 1,140 crores. The EBITDA for the quarter declined by 15% year-on-year to 125 crores, with EBITDA margin reported at 11%. The net profit on continued operation was 28 crores for the quarter. Now let me take you through some of the key highlights across our business verticals, starting with the real estate business. During Q1 the Indian real estate sector continued to flourish, driven by positive indicators such as GDP growth, boosting investment, and strong consumer spending, sustaining demand. Increasing urbanization and steady property value appreciation are also expected to propel the residential market forward. Within this market, the premium and luxury segments are experiencing rising demand, with preferences shifting towards enhanced amenities and luxurious spaces. For Q1 the revenue of Birla Estates grew by over 800% year-on-year to 338 crores, driven by continued deliveries at projects Birla Alokya in Bengaluru, Birla One in Kalyan, and Birla Navya Phase 1 in Gurugram. We achieved booking worth rupees 262 crores in Q1 at our already launched project, representing a growth of 27% year-on-year. We maintained very strong collection of rupees 488 crores from all projects during the quarter. We did two major acquisitions during the quarter, wherein we acquired 13.27 acres of land parcel in Gurugram with a GDV of 5,300 crores. And we also acquired 16.5 acres of land parcel in Manjari, Pune, with GDV up to 1,500 crores. In other updates, Birla Tisya Bengaluru received a Gold Award at the 16th edition of the Confederation of Indian Industry Southern Region Environment, Health and Safety Excellence Award 2023. Additionally, Birla Niara, Mumbai Birla Navya Gurugram received Silver Award at the ROSPA Health and Safety Awards 2024. In our outlook, we anticipate significant growth in the residential real estate market in the coming quarters, driven by a confluence of favorable factors and stable economic conditions, which have attracted robust investment from both domestic and international players. Additionally, infrastructure development and the expansion of smart cities present a new opportunity for growth. Investors are increasingly viewing the Indian real estate sector as a secure and profitable long-term investment with a potential of substantial return. Now moving on to the pulp and paper segment. In Q1/25, paper, board, and tissue prices continue to their downtrend trajectory, with average net sales realization down by 14% year-on-year, although they were at par vis-a-vis previous quarter. This impacted sales turnover and EBITDA. Overall production sales volume increased by 7% year-on-year and 12% year-on-year respectively. Sales volume were lower by 8% QOQ, with general election impacting tenders orders from government. Sales turnover for the quarter decreased by 6% on year to rupees 786 crores, with EBITDA at 65 crores and EBITDA margin reported at 8.3%. Demand for writing and printing paper was subdued in Q1/25 due to deferment of government tenders, seasonal closing of education institutions and courts for summer vacation. Demand remained subdued for both segments as well, and order flow impacted in the first half of the quarter due to the price increase taken at the beginning of quarter. While the tissue paper in the first half Q1, domestic demand experienced an upward trend due to seasonal factors, thereby supporting market sentiment with volume picking up. The company continued to take various cost reduction initiatives like the increased usage of bamboo and veneer chips to reduce raw material cost. Also, we use fiber plant pulp instead of imported pulp in tissue machine, added by suitable chemical program to reduce input costs. On the sustainability front, the company developed 80 nurseries in 11 districts to increase wood catchment areas and achieved around 7.5 lakhs plantation in Q1 with an annual target of 1 crore plantation. It also implemented 5 water conservation schemes with approximately saving of 0.5 million cubic meters of water annually. And lastly, compressed methanic gas generator from wastewater was utilized in tissue paper machine in place of LPG. On the market outlook, seasonal factors are expected to moderately revive writing and printing paper demand in Q2. In Q2/25, order flow in tissue segment is forecasted to be slightly lower in initial months on account of lean season. However, demand is expected to pick up towards the end of quarter. With upcoming festival season as well as FMCG and pharma segments picking up, board demand is likely to improve in Q2. Also, imports are expected to remain subdued due to high ocean freight and issue with container availability. Export demand with Europe, US and UK market likely to be impacted by high ocean freight. In conclusion, Q2 experienced a lukewarm business performance, largely due to rising input costs and global supply chain disruption in the paper segment, and customers postponed of delivery in the real estate segment. Despite these challenges, consolidated turnover for continuing business increased by a healthy 28% year-on-year. Looking ahead, we are confident that sustained demand and strong public investment, both globally and domestically, will drive robust performance in upcoming quarters. With that, I now conclude our opening remarks, and we can start the question and answer session. Thank you, friends.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. I had a couple of questions on the real estate business. Firstly, if we consider the company has a GDV pipeline of about 54,000 crores, given where we are in terms of the cycle, how are you internally strategizing as far as launches are concerned? And if you could also reiterate the timeline around launch of this 54,000 crores of GDV pipeline.
Yeah. Thank you, Karan, for your question. Yeah, as you very rightly pointed out, we have a overall, GDV of 54,000. As you know, we have already launched about 12.5 out of that, and we have clocked sales of about 9,500 crores out of that. The balance will be distributed over the next few years. This year itself, we are planning to launch another 12,000 crores of this in the current financial year. And similarly, I think over the next few years, we will be distributing this. And also, we are looking at adding every year about 16,000 crores of new GDVs every year. And we are looking at a very positive and strong real estate cycle for the next few years.
So just as a So, Katie, just as a follow-up to this, if I look at slide number 17 of your presentation, so FY20 to FY24, we've seen launches of about 2 projects a year. But this year you've laid out a fairly ambitious plan of about launching 9 projects in the rest of FY25. So, how confident are you about these launches, as we've also observed delays in terms of launches such as the RR Nagar project in Bangalore?
No, you're absolutely right. We were supposed to have launched RR Nagar in the last quarter, but because we didn't obtain the RERA, we had to postpone the launch, and we are quite hopeful that we'll be able to launch it this quarter. Similarly, Walkeshwar also we are supposed to launch last quarter. However, again we are waiting for RERA. For both these projects, we are waiting for RERA. Walkeshwar, I'm sure we are more confident that we'll be getting it in the next few days. RR Nagar, I'm expecting it by the end of this month or early next month. But for that, I think we are pretty confident that we are well geared up for the other launches, and we are quite confident that we'll be able to launch all the ones that we had, guided that we will be launching. We are making good progress in all of them. So this was a little unexpected. The RERA person was not there; he resigned. The new person took time to join in Bangalore. So I don't think this will be the normal course. This was a little unexpected. So, but I am quite confident that we'll make up for this.
Sure. And lastly, on your Pune Manjari project, where you penciled in a revenue potential of about 2,500 crores and a total area of 3.2 million square feet. So this translates into an implied per square feet rate of around 7,800. Now if we look at comparable projects in the similar vicinity, that's at about 20% lower versus this. So the question is, what type of product should we be expecting, considering the higher revenue and the higher per square foot potential, and any guidance on margins that you will be targeting in this project?
So, Karan, as you know, our positioning is that we always aim for the most premium positioning in every micro market. In our past, we have shown that in Kalyan, when the market was at 11.5, today we are selling at 15,000 rupees per square foot. Similarly, we are pretty confident that here also we'll be creating a very premium product. We are looking at margin of at least about 25 to 30% EBITDA. More importantly, as you know, we always look at very strong IRRs, north of 20%. So our positioning is no different here. We are looking at the premium positioning, and we are looking at good margins.
Great. I'll come back in the queue. Thank you, and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have a follow-up question, you can rejoin the queue. Our next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone. So I have 2-3 questions. First question is, the launches that you mentioned, 120 billion, 12,000 crore of launches in FY25. What are the projects and how much GDV in each project should be launched? Can you please give us a breakdown how launching the 20 billion would be launched in FY25?
So, Biplav, thank you for your question. So, as I mentioned, this quarter we are hoping to launch RR Nagar, MS, and a new phase of Trimaya and Walkeshwar. Together, this must be about 1,000 plus 500, 1,500 plus 600, so for 22,000 crores. In Q3, we are planning to launch the project which we have finalized in Bangalore Sarjapur Road, and the last phase of Birla Navya in Gurgaon, which is about 1,000 crores, and the Pune project Sangamwadi. So that's in Q3, and in the final quarter Q4, we are hoping to launch the project which we have signed in Thane with the project we have signed up in Thane. Then the new project which we have signed in Pune, we are quite confident that we'll be able to launch that also, which is in Manjri, and also the third phase from Trimaya. So these are the broad launches planned for the coming 3 quarters.
Okay. And Delhi, we are not launching this initially.
Delhi is difficult because the entire approval process takes a lot of time. There are more approvals than usual. So we are kind of planning it for the Q1 of next year.
Okay. That's great. And the second question is, in the Tower 1 Niara, how much cost yet to be incurred? Because last I visited, it was 22nd or 23rd floor level that you have constructed. So how much more total cost to be incurred in Tower 1?
Yeah. So construction cost, if you look at in Tower, we are so far about close to 300 crores.
Okay.
So 300 crores in terms of construction cost, yeah.
Any other cost besides construction cost to be incurred in Tower 1?
Obviously, all this, the premium cost, the SSI cost, the marketing cost, the sales cost, the overhead cost, so many costs are there, Biplav. All of that will definitely be incurred, yeah.
So, how much to be incurred, sir, total, for that?
Offline, Biplav, we can, yeah. Accounting numbers could be done offline, okay?
Okay. And on the paper side, sir, what would be the steady state EBITDA margin for paper shall be assumed in FY25?
Biplav, you're asking for the entire year?
Yes, sir. What should be because margin has been little bit,
Pretty bad, but we are hoping that, with the pulp price increasing, we expect a rise in the NSR, which would contribute to our margin. But I think probably we are looking at right now around 12 to end up 12 per kg. So it's very difficult to give me a margin because, but I can say that our EBITDA will be roughly on an average a year at about 12 rupees per kg.
Okay.
Thank you. The next question is from the line of Amit Srivastava from B&K Securities. Please go ahead.
Yeah, thank you. Thank you very much for the opportunity. So my first question is on a balance sheet to Snehal sir.
Sorry to interrupt. Mr. Srivastava, you're sounding a bit muffled.
Okay.
Yes, Amit, tell me.
Yeah, sir, my first question is on a balance sheet. So basically our net debt number has increased to 29 billion this quarter. And
there is a mistake. The net, it is gross debt. Net debt is 2,500 crores.
Okay. And second is that, sir, our OCF is negative this quarter of around 700 crores.
Right.
So basically, I just wanted to understand how this will play out for the FY25, given we have 3 projects we have already signed, and going ahead also we are going to sign the project. So effectively, if we can give that, how the numbers will be on a net debt side and our CF generation for the year as a full year. Second, in terms of the working capital side, also we have seen that paper division has significantly increased the working capital by 2 billion. So effectively, at a bit of 50 crores, so we have increased the working capital significantly. So if you can give the clarity on that.
Good question, Amit. And let me answer the last question first. Working capital right now is high because we have suddenly got a lot of linkage coal from Coal India, and we cannot refuse that. So I think this is a peak working capital, and gradually we have planned to reduce it. So working capital will be released in the next 3 quarters, so that's not a problem. But then market being subdued, we don't expect much cash flow coming from the paper business this year because they also have their own capex plans, and we cannot hold those capex plans because that will impact our profitability in the future year. So even if you consider, let's say for hypothetical case, a zero cash flow coming from paper business, we are still comfortably placed because whatever debt the parent has raised, now future financing will come from the subsidiary because they have undrawn construction finance lines which they have not used. Even at the parent side, because the Niara project is on the parent's books, so we have not drawn in construction finance for the Niara project also. So I don't see many major issues in terms of financing our future deals. Of course, the debt might go up a little bit by the end of the year. We may, on a consolidated basis, cross maybe 4,000 crores. But that all depends on how many more projects that we sign. But raising that money is not a problem for us.
So how much is going to be we are going to invest for these 3 projects of 9,000 crore GDP which we have recently signed?
So, Amit, as I said, the biggest one of here is 5,300 crores from Barmalt. It's a JDA with just about 145 crores payment. So it's not a big deal. The other one, which is Manjri, is a deferred outright deal. So we have paid only some 200 crores right now. And we have also signed a third project which we announced yesterday. Right. They're also about 170 crores. So it's fine.
Okay. And second, sir, in terms of the project launch which we have just outlined that around 12,000 crore we are going to launch in FY25. Whereas in a presentation effort on a 17th slide itself, you have mentioned around 8,500 crore of GDP expected. So just wanted to clarify on that number here, what is the difference between these two?
Yeah. So here I think we had, so I think, whatever we have now, whatever I'm telling you now, that's what we are aiming at.
Okay. So any project like in a Birla Niara phase 3, also we were planning earlier in a Q4, but now it seems we have postponed.
Yeah, we are not looking at this year. But I think the size of it, I think we'll take it up the next financial year.
Okay. So basically the one project which recently we have signed, maybe that will come into the picture, which is not that late.
Yeah, the one in Manjri, that's moving very fast, so we are quite hopeful that we'll be able to launch that this year. We had even given that guidance also.
Right.
At Manjri, yeah.
Okay. Last question is, sir, on a Birla Estate numbers, if you look at what is the kind of margins we are making in terms of the project which we are delivering now? Because whatever the numbers we have looked at on our Birla Estate numbers, on our sales of around 450 crores, our numbers on our EBITDA side is almost like zero. So effectively, and that is how it's very good.
Slightly mistaken there. I think we are already, whatever we have delivered so far, we are giving a 27% plus margin. Don't look at those numbers because those are the numbers of including all the overheads and, all the kind of growth that we are currently doing, the marketing expenses of launch, everything including that. That's not the right number. As we get more scale and we start delivering more EBITDA, this number will go up. But I can assure you that at the project level, each of these projects are delivering at least 27%. Some projects like the NCR project, we have only accounted for the margin for phase 1, but as you look at the other phase, it's going to be almost as high as 40% plus. So I don't think margin is a worry. And as I mentioned, margin is of course an important, but the most important thing is IRR, how quickly we turn around projects, how quickly we bring in cash so that the growth cycle keeps continuing. And even if we get caught in the wrong cycle, we are not left with too much unsold inventory. Yeah. So IRR is the number one concept. Margin is also important, but margins, and we are pretty safe with the margin. That's all, at least about 25%. Okay. No, that's what I just wanted to get clarified. That on our existing project, whatever we are delivering, around 25% plus, we are getting it. Yeah. At this point of time, whatever we have already accounted for is about 27.5%. Okay. And so last on our Birla Navya, there was a FSI thing which was not getting clearance. That's clear now. Yeah, that's clear. Government has cleared it. It came in the newspapers. We are all set for the last phase launch now. This year we'll be launching it. Okay. Thank you. Thank you very much, sir. It's really helpful. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Also requesting all the participants to restrict your questions only to 2 per participant, and you can rejoin the queue for any follow-up questions. The next question is from the line of Jojo Shaju from Alpha Invesco Research Services. Please go ahead.
Yeah. Thanks for the opportunity, sir. So I have 3 questions. First is regarding the real estate division. So in the last call, you have mentioned that our corporate overhead was around 175 crores annually. So this is increased from 100 crores if I check a couple of quarters back. So just want to understand what is the increase going forward? What is the steady state number of corporate overhead in the real estate division?
Jojo, right? That's Jojo, right?
Yeah.
So Jojo, there is no steady state. As we keep growing, we'll keep increasing. Our corporate overheads will also increase as we are strengthening ourselves in many parts. It's difficult to give you a steady state number because in several areas we are kind of strengthening as the scale increases. It's very important for us to strengthen our management team and our controls, mechanisms, etc. So, but largely I could tell you that it will not exceed about 3 to 4% of our bookings. If that's a kind of a ballpark figure, 3 to 4% of bookings is what we should kind of consider as our overheads.
Okay, so 3 to 4% we can benchmark according to the
I think that would be a good benchmark, yeah.
Okay, sir. And so what is the expected collections in the real estate division for this entire financial year? And for the collections part, where exactly it is reflecting in our financial statements?
Sorry, for collections, yeah, of course, we give
1,500 is our target, right?
Yeah, 2,900 is what we are targeting.
Our expected target of collections is roughly around 2,900 crores. In terms of reflection in the balance sheet, it comes under our inventory for the real estate business because it is the amount that we spend on construction that is shown as a asset, and the collections that we have is shown as a liability.
Okay, sir, understood. Got it. And so what is the construction spending for the next, let's say, next 2 financial years? What is the expectation?
2 financial years will be difficult, but I think it will be more or less in lines of our collections, a little less than our collections.
Okay, got it. And so my last question is, I just want to understand how is the JV with the Graphene performing? Will it have turnaround in the current year? What is your views?
JV with Graphene?
JV with the Graphene, yeah.
JD with Graphene? So we have no JD with Graphene. You are talking real estate business or something else?
No. This is not on the real estate. This is, I think, on the.
No, that is a joint venture. It's a joint venture with Grasim in the textile side. So that is the only remaining textile part that we continue, and that is in the initial stage, Jojo. So it will take some time to generate profits, and but it is not a significant ask on our balance sheet. it is more a new thing that we are developing in the country. So it will take some time to absorb. So hopefully this year also probably we might not see the light at the end of the tunnel, but certainly next year we will be starting to show profits from that.
Okay, got it, sir. So that's from my side. Yeah.
We had a 8 crore loss this quarter from that business. Our share of profit.
Okay, understood, sir. Yeah, sir. Thank you. That's from my side.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Hi. Good evening, sir. Thanks for the opportunity. Sir, this quarter we have recognized around 338 crores of revenue in the real estate segment. So I think there is one portion which is the lease revenue, and there's the revenue recognition from various projects. So if you can break this up for us, how much is the revenue from the lease and what are the project-wise revenue which is booked in this 338 crores?
So it is 37 crores from lease rentals, 68 crores from 1 year our Kalyan project, 196 crores from Gurugram project, and 37 crores from our Bangalore project.
Okay. And sir, since I think this 34 crore EBIT that we have recognized, I think there is a portion of corporate expenses which is impacting this EBIT. So if you can tell us what is the corporate level expenses which is booked in this quarter, and also this EBIT also has a portion of lease income. So the lease revenue, how much is the EBIT of the lease revenue in this?
So let me, you can probably work out everything else from on the revenue recognition of the project. From the revenue that I just now mentioned, 1 year we have got about 13 odd crores. Avarna we've got about 60 crores, and Alokya we've got about 11 crores, and balance is it's a loss after providing for all corporate expenses. I don't have the exact numbers right now, but we can offsite. You can ask for this.
Okay, and if you can just help us, what would be the corporate level expenditure that was booked for this quarter in the real estate segment?
Yeah, so we'll provide you offline those numbers, sir.
Okay, definitely. I'll come get in touch with you offline.
Sure, please do that.
Okay. Thank you. I'll get back in the queue, sir.
Thank you. The next question is from the line of Deep Mehta from Bank of India Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for aggressive BD for the year. My first question is regarding our organizational capabilities. We are planning to significantly increase our launches as well as pre-sales for the year. So how have we already developed and planning to develop further our organization capabilities in terms of hiring new people for different roles, different geographies, and also solidifying some our processes? So if you can talk about that.
So, Deep, thank you for the question. So, yeah, as we keep growing, we have creating a decentralized organization. Each region will have their own, teams which will be responsible for their P&L of the regions. So Bangalore has their regional team, NCR has their regional team, Pune we are now developing our regional team, Bombay and Bombay has our own, its own regional team, and there is an HO. So as we keep growing, we keep enhancing our operational capabilities, sales capabilities. We already have a very strong BD team which is doing its job very well. We have a very strong sales team which is empowering the sales performance of the company. Similarly, we have pretty strong operations team. As we keep on scaling up at each region, we recruit the right kind of people, and we have a very strong process of orientation in terms of Birla Estates way of selling or Birla Estates way of customer centricity or our operations, construction, etc. Largely construction is outsourced. We go with the best of construction partners. So it's largely mostly management monitoring and control systems where we very strongly do our review mechanisms, and we give a lot of research backed ideas onto the design, and we have a very strong budgeting and quality control system. Execution is our core strength, and the deliveries that we are doing, we have got NPS scores of almost 85%, which is one of the highest in the industry. So, and we keep monitoring these parameters to make sure that the delivery and quality and cost and returns are the most efficient. Does that answer your question, Deep?
Yes, sir. This is very helpful. And my second question is regarding our unsold inventory. So, if you can give the value of unsold inventory as of the end of the quarter.
So,
this.
Unsold inventory is very little. Most of the inventory that we have launched is sold out. If you look at NCR, it's almost 100% sold out. If you look at Bangalore, it's almost 95% sold out. Mumbai is also. So overall, I think about 87% of the launched inventory is sold. So what we are now, the sales performance is a little muted. The first quarter is largely because of lack of inventory, number one, and also lack of new launches. So we hope to make it up in the coming quarters.
Sure, sir. Can you help me with the absolute amount of unsold inventory? Rough number will also work.
Yeah, so the numbers of these things, I think we can help you offline. All these numbers, about 12,849 crores is what we have launched, and what we have kind of booked so far is about 9,428.
So roughly 3,000 crores.
Yeah.
Sure, sir. That's all from me. Thank you.
Thank you. The next question is from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hi, Katie, a couple of questions for you. So, firstly, on GDV, the projects that we are adding, is there a target in mind for the year? So that's question one. Yeah.
Yeah. So as I mentioned, largely we are looking at about 15 to 20,000 crores this year, and would like to continue to look at that sort of number, so that we can keep growing and can do full justice to our sales process also, and cash turnaround also.
And how does it break between various markets, or nothing specific there?
No, I don't. We are not put a number. Wherever we get the right opportunity is the most attractive. Ideally, a JDA, etc. If not a JDA, then in a great location and premium locations that we are aiming at. As I said, we are not taking risk in terms of title or location, or in terms of speculative future locations where the markets might emerge. We're not looking at those ones. We're only looking at well-established locations. So from that point of view, I don't want to put a number to each region. Wherever we get the most attractive options, we'll go there. I think all four markets are equally attractive.
Okay, and I presume the opportunities are still fairly attractive, and there's still not too much competition out there.
That's right. The competition is definitely there. It's increased. So wherever we think it's the right deal that we are getting it, we are going for that.
Got it. So secondly, and this is a bit of a market question. I mean, we have heard in the last quarter that, for example, in NCR, we have seen a couple of projects which have underperformed, say, either in terms of pricing or volumes. Wanted to hear your take on that.
See, I think, if you price it right, I think you will be able to get the volumes. Market real demand is there. Supply is very few. If the design is right, the product is right, the ticket size is right, I think, we should be able to, at the right locations, I think there should be no issue with the moving, inventory. If you overprice it or under-design it, then there could be. It's important to get the product right in every market, and the price also right. I think both those combinations, one has to get it right. If that is right, I'm pretty confident that there should be good traction.
Right. And broadly, so you wouldn't, be overtly worried or look to change your sales guidance for the year?
No. At this point of time, we're pretty confident.
Sure. great, and all the best to the team, sir. Thank you.
Thanks, Abhinav. Appreciate that.
Thank you. The next question is from the line of Raj Rishi from Dhan Group. Please go ahead.
Yeah, hi. Can you give a perspective as to what kind of quantum of group properties you can develop over the next 3 to 5 years?
I think pretty limited. There not much in the markets that we have chosen. I think we are kind of maxed out in terms of group properties.
Okay.
Because largely the properties are in Mumbai, and I think all of that we have counted. Maybe in Pune we have about 45 acres in Talegaon, so that kind of develops, and the broad the town planning rules change, then we may launch that. But apart from that, I can't envisage any more launches or any more kind of tie-ups with the group plans.
In a previous call, in fact, I had only asked a question, and you had talked about, other than the present focused geographies, a lot of huge number of group properties there which can come into the Century Textiles fold. So
yeah, but as I said, the next 2 years we are not looking at expanding into any other region. I think we have got a job cut out in kind of consolidating in these 4 markets that we have chosen. I think we'll be focusing on these markets.
Okay. And I believe you had an aspiration to be in the top 3 or top 5 in the next coming years. That would entail a huge quantum jump in your business, right? So how can you comment on that? Like, what kind of aspiration? How do you plan to reach there?
Yeah. So we are very confident, and we are aspiring to be among the top 3. But more important, as we scale up, it's also important for us to be as the most reputed player in terms of customer centricity and in terms of quality. We are willing to give up scale for these 2 parameters. What's most important is to give high quality products within the specified time, and give the best of customer centric service. Scale is important. As a group, we have always been the top 3 in every businesses that the group has entered. So we're pretty confident that we'll be aiming for that too, but not at the cost of the other more important parameters. So it will be kind of a balanced approach in terms of scale, in terms of quality, and in terms of customer centricity.
Okay. Any plans for fundraising on the equity side?
We always are looking for raising platform funding for our private equity funding for scaling up our residential portfolio, maybe at some point of time even a commercial portfolio, but not in the near future for any public sort of funding.
And this won't be in the parent in Century Textiles. It will be in the particular project.
Yeah, it will be the project level.
Okay. Thanks a lot.
Yeah.
Thank you. The next follow-up question. The next question is from the line of Vivek Ramakrishnan from DSP Mutual Funds. Please go ahead.
Hi, congratulations, Katie. So my question was on Niara Phase 1 and Phase 2. If you see in the last quarter, the percentage sold has gone up from 68% to 71%, and it had a big bang launch. So what is the ebb and flow of this business? I mean, is this going to take a little more time to dispose of the property? And how does it happen in Phase 1 and Phase 2? Because they're entirely different customer bases.
Yeah. So thank you, Vivek. So Niara Tower is now, in terms of units, almost 90% sold out. They've also increased the price to now about 1 lakh rupees per square foot, and I think we'll be happy to now sort of really look at the rest of the apartments more towards completion. I think it makes sense. Also, it's more than 90% gone. There's hardly 20-25 apartments left. As far as the Tower 2 is concerned, we have sold more than 50%, 52% in terms of area or units. So, and the traction has been very strong in last quarter. And after that, this election year coming, there has been a slowdown. I think the initial demand has been sucked out. Given that, I think a new round of intergeneration is going on, and we expect to do about 3 to 4 apartments every month from here onwards. So that's the kind of velocity we are aiming at.
Okay, thank you very much. That settles my question. Thanks a lot.
Yeah.
Good luck.
Thank you.
Thank you. The next follow-up question is from the line of Biplab Deparma from Antique Stock Broking. Please go ahead.
Thank you, sir. Thank you. Sir, on the you mentioned about Manjari and Sector 71 that we occurred yesterday. The 200 crore and 170 crore that you mentioned, are these the cost of acquisition, total cost of acquisition, or these are the initial payments?
No, I think Sector 71, which we kind of concluded yesterday, I think that's a full payment, full cost of acquisition.
So 170 crore cost of acquisition you have paid, right, sir?
That's right. Yeah, it's an outright.
And for Manjari, what will be the total cost of acquisition?
Manjari is about 340 crores, but it's a deferred sort of payment. So
Okay. So
the next 2 years, yeah.
So out of 340 crores, you have paid so far 200 crores. Am I correct, sir?
Yeah,
okay.
yeah.
Okay, sir. And my second question is for FY25, remainder of FY25, any more projects, residential projects that could be recognized?
Recognized? No, I don't think what is recognized. Yeah, whatever is the balance of these Kalyan and Alokya and a bit of Navya. So the unrecognized ones, what that part is there in terms of handing over is going on. Beyond that, I'm not expecting any new projects to be handed over or any new phase to be handed over this year.
And in FY26, any new projects that could be recognized?
FY26, maybe another phase of Navya will come up.
Okay.
Yeah.
Thank you, sir. That's all.
Yeah.
Thank you. The next question is from the line of Amit Sanghvi from Investor. Please go ahead.
Yeah. Good evening, sir. My first question is related to the inventory left out for these 3 completed projects, which is left out for the purpose of revenue recognition in terms of square feet. And my another question is regarding, it is in terms of suggestion that if we can put one more slide in our presentation for the land which we have acquired but which are yet to be developed. And that is my second question, sir. Okay.
Sure, we can do that, Amit.
Yeah.
Yeah, we can do it. Yeah. And what is the first question? As whatever is recognized and unrecognized.
Yeah. We have completed 3 projects, right? Vanya, Alokya, and Navya.
Yeah.
In these 3 projects, what is the total inventory left out as on 1st July, which is yet to be recognized in the books of accounts in terms of square feet?
Yeah. So there is, if you want to go into the details, we can go offline.
Yeah.
Right? So I think we have about the Navya, it's about 228 units, of which we have done about 200 and around 28 units have we recognized. Alokya about another, I think about 76 units has to be recognized. Vanya is a major portion, about 700 units has to be yet to be recognized. Okay, and it is going to be recognized in this year itself, right? Because the project is completed. Yeah. So Vanya, I think we have 7 towers of which we have got OC for 5. There were 2 more towers which we are expecting the OC in the next this quarter and next quarter. Okay. So what you said is in Vanya 700 units, in Alokya about 76 units, and in Navya about 220. Ballpark figures, these numbers. Okay. I can understand it. Okay. Yeah. This ballpark number. Okay. Yeah. Thank you. Yeah.
Amit, you can go on slide 16 of the earnings presentation. You will get the details between the GDV for what we have launched and what is upcoming.
Okay. I will do that. Okay. Thank you, sir.
Thank you. The next question is from the line of Harsh Pathak from B&K Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. My question is on the project Sector 31 Gurugram that we just acquired this quarter in the first quarter. So what would be our share in the JV? So it's a 40% rev share.
40% to the partner and 60% to us.
Sure. And so the indicative GDV of 5,000 pertains to just us, or it's at the project level?
Sorry, I didn't get you. What was that? Indicate?
The GDV.
5,300.
Yes. So is it at the project level or our share?
Sorry?
Is it our share or is it pertaining to the overall project?
Oh, the total is a gross. That's a gross. 5,300 is a gross number.
That's a gross. Okay. And and so my second question is, regarding the land availability in NCR. So I think we now have total 4 projects in the NCR market, in the NCR region in our portfolio. But this quarter we have done our first outright purchase in that market. So how is the land availability and how is our thought process regarding going ahead for outright purchases? What kind of margins profile can we expect? What's your take, sir?
Yeah. So as I mentioned, margin profiles are always looking at 30% plus margins. What we have, but what we are more focused on is 20% plus IRRs for our JDA projects and 16-17% IRRs for our outright projects. So we are working well within those parameters and those guidance. Of course, land is very, very scarce in NCR. Very few lands are there, and all the lands that we have kind of finalized is very, very prime properties. Excellent locations. All should be selling above 15,000. Of course, the Sector 31 is extreme premium. I think we expect at least 6-7 crores per apartment or more per apartment there. So all at a very high premiums, and it's very difficult to get land in NCR today. Supply is very little, and we are very happy to have done these acquisitions.
Sure. So can we expect more kind of an outright purchases, or our preference will be more towards CVJ?
Harsh, we are on the lookout for the right kind of lucrative deals. Very difficult to come by, but yeah. And as I said, we'll keep looking for the good deals. So it's possible that for a long period of time we may not do any deals, and suddenly we may get the right deals. We may do quite a number of funds. So depending on the quality of the deal, we keep looking for it in the right markets, the right location. So we have been fortunate that we got this deal at Sector 31. It's a very, very attractive deal, and what we kind of acquired at 71 is also an extremely favorable location at a very good, attractive price. So that's why we went ahead and did it.
All right, sir. I think that answers the question. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thank you again for giving me the opportunity. I had similar questions on the Gurugram projects, but one more question, sir. So in Niara Tower 2, I think the last quarter we had sold around 68 units. So how many more units did we sell in this quarter?
Oh, we are at 75. 75, but there have been a few cancellations of that 68 later on. Some people did not go ahead with, they withdrew. Not many, a handful of them, and now today we are at 75.
Okay. And sir, the sales of 70,000 square feet and 262 crore value, if you can break it up project-wise for us?
Roughly 225 of that is Niara.
225 is Niara, okay.
Yeah.
Okay, that's it. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Himanshu Javeri, who's an individual investor. Please go ahead.
Yeah, hi, Katie. So,
hi, Himanshu.
I just wanted to ask, what do we aspire as a company, and can we expect to do a top line of around 20,000 crores, 20,000 crores in the next 3 years? And what do we plan to do differently to make Birla Estates a niche and a premium brand in the market?
Yeah. So I think, the next 3 to 5 years, I think it's reasonable to expect a top line of 20,000 crores. I think we can easily reach there. We have very strong presence in each of these chosen 4 markets, and I think we could be the dominant player in each of these markets. That's our aspiration. How we want to differentiate ourselves, as I mentioned, is through superior quality delivery, extreme focus on execution, extreme focus on design, customer-centric design, be the most customer-centric organization. be a very experiential driven company who gives very superior experience to our customers, taking care of them, doing the making sure that even after customers move into our projects, they get a very different experience of living, community building. Our aspiration is to create happy Birla communities, make them a very differently engaged community, enhanced living experience, etc. So that's how we want to sort of differentiate our projects in the very long term. I think so. Our endeavor is to get there while building scale through very strong processes and focus and execution.
And do we also plan to have a huge workforce and machinery to launch projects simultaneously across different states in every quarter? Because if we want to reach that 20,000 crore mark, we'll have to have a big, the machinery should be very good.
If you are meaning machinery in terms of processes and team, we are all for it. If you're a hardcore hardware machinery, we are an outsourced company. We are looking at
machinery in terms of the teams and sales force.
Yeah, of course. We are in the process of building. Every year we add about 40-50% more employees. We were at 200 last year. We are at 350 now. We may go up to 500, 550 as the demand for people are there. The only thing is that we look for very high quality team, and there's a lot of training orientation process within the company, create a very strong culture of high performance and customer centricity. It's very service oriented. So I mean that's the building blocks of the company. And we're also creating a decentralized system which can move very swiftly, quickly, empowered sort of team.
That's great. And I read an article, Katie, in a newspaper of the Century Bhavan being demolished. And so, are we planning a project over there? So
we are very seriously evaluating it.
So not still fixed anything, right?
No, it's under evaluation.
No, because just next to that, the Oberoi 360 and all are selling at very well and good premium prices. So there's a huge scope to.
Yeah. We are pretty aware of that. Yeah, we're very aware of that, and we're looking at the opportunity.
So in future we might do it, right?
Possibilities are there.
Okay. Thank you, Katie. Thanks a lot.
Thank you.
Thank you. The next follow-up question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Thank you for the follow-up opportunity. Katie, so on the outright purchases, so we have been saying that last year also, when we compare the cost divided by the GDP, it is less than 15%, and around 13%. This year also, for both Manjari and Gurugram Sector 71, they are less than 14% of the GDP, acquisition cost. So, is this a normal rate for outright acquisition, like 13-14% of the GDP? It seems very on the lower side. So it's a good thing. So I'm just trying to understand whether we can continue to do such excellent outright purchase is going forward. That was my question.
Yeah, Biplab, so we keep looking for the right opportunities, but it's not just the price, it's also the location, the other factors, how quickly we can launch it, how it will add to the overall brand value of Birla, how the access, the other parameters, development potential, growth potential, etc. And also, of course, the price. So all those factors together, we look into it. So that's why we are a little patient and take our time to do the BD. So these are the two ones which we got into, after prolonged negotiations, we were able to conclude it. But we can't take that, 13% as a benchmark. As I said, there may be properties where we may have to pay a higher price, but the location is great and it makes sense for us. Overall, we try to look at that we don't pay more than 20-25% of the overall GDP to the landowner.
Yes, that's great, because so far you have been doing 13-14% of the GDP. That, in my view, is excellent. And my final question is on the Thane project. What would be the, if you launch the project this year, what would be the estimated rate that you expect to launch the project? I mean, in terms of rupees per square feet carpet area.
So it's too early, Viplab, to kind of give a guidance on prices. I know that on a saleable area, we've been looking at least 11,000 plus in that market. That's a very, very strong, very attractive market. We are catering to both Navi Mumbai and Thane. So, and the location is fantastic. It's two pieces of land on adjacent both sides of the road. A huge opportunity, but little early on the to give a guidance on price. But at least that's the kind of you're looking at about 11 to 12,000 rupees per square foot on saleable area.
Okay. Thank you, sir.
Yeah.
Thank you.